What's good, YouTube? It's your boy Will coming back with another update video for our beloved AMC for today, September 1st. As you guys do see from the big red candle today, we did have a red day, or essentially down 7.30%, or otherwise giving back $3.44 to the price we had already achieved. Not a bad thing. Again, no stock in the stock market goes straight up every single day. That is not possible. Otherwise, every single one of you wouldn't you been watching this video, you'd be just putting your money into that and just riding the wave up, just like everybody else would, right? But again, in the stock market, we need these healthy pullbacks so that we can gain momentum to keep heading towards the positive side. Again, we are currently sitting essentially directly now below this $45.07 point of resistance. We were on our trajectory up to this 53.20, but that's what I want to cover in today's video, because actually yesterday, while I was studying the chart, I actually uncovered something pretty interesting that I wanted to talk about today, because it threw me off. Again, it's something I just hadn't noticed, but again, that's why I always tell you guys, you always have to keep looking at the charts and studying them, because eventually the data will come to you to where you instantly recognize it, and it just gives you a better understanding of what you're looking at and what you're facing when you're choosing a stock you're highly convicted on or wanting to invest in, right? But before we get into that, let's take a quick peek at the market. As you guys do see, we did have a heavier green day. There was some red out there, but essentially for the most part, I would say probably 60-40 green, which is good, right? Again, no stock goes straight up every single day. You have to have these healthy pullbacks. Looking specifically for us, where are we? Oh, we're the biggest red block here on the bottom lower corner. For those of you that didn't know, this is us. Specifically in the options chain, taking a quick peek, I did already had, or had previously taken a look. We essentially had a rate of 2-to-1 for every one put. 2 call contracts were bought. 533,000 total call contracts were purchased today. Specifically looking for this week, as you guys do see here in the open interest, the momentum has started climbing as we get later and later in the week, just like we had anticipated. As I had told you guys from my video on Monday, I anticipated they would try to keep us below this 50. On Monday, we only had 12,000 contracts. As you see, that number has dramatically increased now to 32,000 contracts at this $50 strike. There is another significant amount of 11,000 contracts here at this $45 mark, which again, we had successfully acquired yesterday, but now we've given them back since the price did dip down a little today. But nonetheless, we still have Thursday and Friday's price action to see where we end up for the week. Please don't forget, there is a lot of positive sentiment behind September due to some of the rule changes with the DTCC. There are plenty of news articles you guys can research on Twitter, Reddit, Wall Street Journal. I mean, pretty much anywhere. They've been talking about these rule changes. Essentially, what the main rule change that people are focused on is the margin requirement, right? So for short sellers, another key takeaway in case you did not know, for them to be able to short a stock, they have to take and utilize their margin, which is essentially, if you hold $1 million of a stock, right, then you are given $500,000 essentially of margin in this example. That $500,000 of margin is what you can use to short, for example, AMC. Well, before, I believe the number was 10,000 minimum. That number is getting increased to $250,000. I'll make a video about it tomorrow. Today I don't really want to focus on that. I wanted to focus on something I found while I was studying someone else's video, learning strategies of when to buy in into investment specifically, right? And it was specifically talking about utilizing the one-day chart, but also utilizing lower intervals below it. So essentially, if you go down from a one-day chart, you would go down to a 4-hour chart, and trying to see distinctions in touch points. I know that doesn't seem or make sense right now, but it will in a few moments. So when I was looking at the chart, I focused on this last 2-month window to see what opportunities I could have better utilized for myself when I wanted to initiate a trade. What I found was pretty interesting. If you focus over here, this is essentially July 1st, the last candle being September 1st. So you have a 2-month stretch here on the chart. If we focus in on this specific candle, this is July 6th. You see that the price started that day or that morning essentially at $55, or let's call it $55 to make it easy. And by the end of the day, we had ended close to the $50 mark. So From this day, the 6th, to the 7th, you also notice another big distinction in the price action. There's this gap down that you now see by this highlighted bar. Okay, I'm going to change the color of this bar because this is going to help me explain what I noticed and what my takeaway is from it, because I think it's pretty important. So I'll make it white so it's clearly visible. So now that I've highlighted this bar here, one of the things, Rainer Teo, which again, if you haven't looked him up, I definitely recommend. He has a ton of videos on YouTube. He has a huge following. That guy honestly is a genius. He even gives you a book for trading strategies if you want it for free. It's literally downloaded to your computer and you have all this reference material you can use for trading. But essentially what he was saying is that when a stock, or essentially a candle, for example this red one here, hits a point of resistance and you see this wick sticking above it, this is a zone that he identifies in his video, essentially a zone of strength, right, where the price action is not allowed to continue past that. How you verify that is by switching, for example, from the 1-day chart to the 4-hour chart, from the 4-hour chart to the 2-hour chart, from the 2-hour chart to the 1-hour chart. And if you see the same patterns through different intervals, that's confirming this is a zone of strength, or essentially a very strong resistance point. If you're trying to go above it, it's resistance. If you're staying above it, it's support. In this case, where we are now, as you see from the price action being all down below this huge white bar that I've highlighted on the screen, it's a point of resistance. So when I switched it, which I'm about to do now for you guys, and I'll zoom in so we can get better views, because I know some of you guys watch this on your phones. Going to the 4-hour chart, we'll zoom out and we'll focus in on these touch points here. What you see is, you see candles forming above this white bar, in this white bar at the top, and then slowly climbing down. You see this wick at the top? That's telling you this is such a strong point of resistance, it's literally eating the body of the candle, trying to keep it down as far as possible, as fast as possible. Well, look at this candle. This is 4 days after we touched this area. You see that the candle body is pretty much eaten, and you have this long wick sticking above it. That's your confirmation. This is a super strong point of resistance where the price will not go up. Even on a day where essentially we have 87 million shares purchased, which is this big green candle here. We can confirm that by this number that puts it here in the volume. When I put my mouse over it, you see 87 million shares. Not even 87 million shares could break through this point. You see at the top of the candle, you see a little bitty wick sticking up, but it does not break this area of resistance. In the candles subsequent to that, you see the same tendency, right? Until eventually the short sellers are able to push the price down. Anytime we've gotten close to this area, we see the same thing. So we didn't even come close for essentially a month and a half. And then about 2 weeks ago, we started approaching this area. But what do we see again? This huge red candle, 151 million shares purchased. And you see this gigantic wick at the top that barely touches it, but the body's eaten down, essentially telling you short sellers, or this point of resistance, is pushing the price down as hard as possible, not letting it break through. So what am I getting at? When you see a red day like today of 7% after we've approached this area and bounced off, that's good, because essentially what we're going to do is build a floor here and work our way back up to breaking through this point of resistance, which eventually we will break through. It's just going to take more momentum. If you ever watched any other YouTubers, I know Trade Trades is very often quoted as saying that on every 4 attempts is when we break through. Well, 1, 2, and 3, right? Ever since we broke through the first time. So essentially on the next attempt, we would break through according to his strategy. Again, you can watch his videos to reference some of the ideology he has. I do sometimes watch him because, again, he does have a lot of good points that he brings up and things that he sees. You don't have to just watch one specific person's point of view. It's always good, or in my example, I like to gain a multitude of views so that I can narrow down my opinion and my conviction in a stock. But if we switch it to the 2-hour chart, we again see the same pattern that we saw in the 1-day and the 4-hour chart. You see candles approaching and then automatically getting pushed down or rejected. Again, you have more candles touching this white zone, but they don't break through. Specifically in the beginning, you see again more touch points. I think on the 1-hour chart it was a total of 22 touch points in this white zone, or this white bar that I've identified, where candles either form directly on it, perform within it, but they don't breach after this point where we were pushed down below it. Again, the green candle, same situation. Every single time we get in this area, the candle does not break or ellipse this point, which again is a strong indication of a huge point of resistance. But nonetheless, it's nothing bad. It just helps us plan our strategy better, right? So essentially, how could you use this to your advantage? Well, you gotta take what the chart gives you. So if now that we've identified this is a strong point of resistance, you see here we bounced off, rejected, and got pushed down. Well, when you see the price fall down to here, this is a good place to keep adding more shares. Why? Because automatically we're going to have to go back towards that point of resistance. Again, example today. We hit this point of resistance, bounced off, and we gave up essentially 7%. More than likely, in my opinion, tomorrow we will have a strong push to the upside and test, once again, this point of resistance. Hopefully, if some of the opinions out there about our every fourth test is when we break through, tomorrow will be our day where we break through this point of resistance. Now that I've identified this too, please and believe that I'm going to keep continuing to scour this chart more and more to see what other areas of resistance or strong areas of resistance like this are up further higher in the price action. Because again, this is something I completely missed. And again, I probably wouldn't have even caught it had I not watched that video trying to study this chart more to see what more data I can extract from it. But I think you guys get the point. As always, I'll try to be producing better content for you guys and seeing things that I see so that I can point them out to you. Because again, I think this in the long term, when this is all said and done, a lot of you guys that are new to the stock market are going to be a lot more patient, a lot more strategized, and a lot more educated in how to invest in the stock market, which is only going to hopefully in the long run produce more money for your guys' ambitions and dreams, right? Which is the goal. I want nothing but everyone to make as much money as they could possibly dream. So we'll get there together one way or another. We just got to stay positive. And again, always have control of your emotions because you don't want to be trading in the stock market based on emotions. But anyways, guys, please leave a like or a comment down below. Don't forget to subscribe to the channel as it does help with the growth. If you guys have a question, leave it down in the comments and I'll get to you. And as always, don't forget you can always follow me on Twitter and IG for more stock news. Catch you guys in the next one.